All right. Good morning, everybody. One of the biggest things on the docket today is European Central Bank rate hike. So, the job numbers, yeah, okay, they matter. But the thing is with this bank fiasco, everybody's really looking forward now instead of using the typical Fed dot plots, which are looking backwards. So now they're more concerned with how the Fed is going to respond to this bank situation, and their response to this bank situation really doesn't have anything to do with the dot plot that they've been using. So yeah, then the numbers still matter, but not as much. Now, whether or not Europe today hikes 50 or 25 is kind of a really big deal, and that's why it very likely is going to be more impactful than our numbers that are coming in today. You can see, right, when we look at the anticipated impact, all of the European central bank policy is really solid, dark red, and the others are a lighter, less anticipated impact. Once we get past that, there is an EIA situation at 1 o'clock. I don't know, if this is recorded or not, and that's something you always have to be mindful of, that a lot of these things they get put in here, they're predetermined. They're recorded. There's no questions. There's no, response that can kind of shock a market. So maybe at 1 o'clock, this would be potentially impactful. Or what I would recommend, if you have time, look it up this morning and see what is actually going to be going on during this discussion outlook for the EIA leader, right? Try to figure that out. See if it really is going to be something that is anticipated to really rock the market. So we can see Asia closed inside day. That is about as good as we could ask for in the moment, that it just didn't break down more and kind of held the line. And Europe, after such a tremendous move yesterday, is basically sideways. And that makes perfect sense, right? Because they got FOMC of the, well, they call it ECB, but they got rate hike decision today. If that was our market and we were all sitting around waiting for the FOMC, we'd have a sideways day too. So the fact that they're sideways right now, not much of a surprise, right? And in fact, really, our markets are kind of holding their breath a little bit too, to see how this all plays out over there. So crude finally broke through that low, that liquidity zone, and has legged down. I really think there's going to be a lot of defense down here, right? If we consider all of this a draw, and the breakdown now as a raid, this raiding into the liquidity is very likely going to be defended. If you're short, anticipate that you're going to see a little bit of a bounce back up into resistance, and then the argument is going to be, when it bounces into resistance, is it actually going to make it through that resistance or not? Either way, the bounce is coming. So you might as well be prepared to take a little bit of heat if you're short. If you missed it and you're not in it yet at all, you might consider getting into the party after the pullback into resistance, maybe around that 72 area. We do have auctions today too, 11 o'clock and 11:30. Once we get past that, then we just have that energy leadership conference this afternoon, whatever that happens to be. I really am not anticipating it's going to be very much. If it's just a panel where they're all just sitting around chit-chatting, right? We're not expecting any kind of policy, we're not expecting any new information that could rock the market, then I wouldn't anticipate that it's going to offer any rocking in the market. Simple enough. $9.15 though, that's the big one today. Some of these auctions today, the 10-year tips, that's kind of a big deal. Don't get me wrong, they all are important, but the 10-year, the 30-year, this one here, this tips, these are maybe a little more important. It's like trying to decide which one of your dogs is, the more important dog. They're all important, right? So volume is still within the range between the 100 and the 200, and we are still seeing movement through the March contracts because that's not done yet. So it's a part of the volume that we're seeing. They're just rolling from March into the new June series. So, the volume, even with that rolling, is still within our lines. We're inside day, nearly in the middle, right? Not perfectly, but enough. And if you're trying to avoid, trading choppy, nasty, difficult price action, quit doing the hard stuff and just do the easy stuff. Doing the hard stuff would be trading inside of the Globex range or trading inside of the previous day's price action. I'm not saying it's not tradable, just that you're going to find it harder to do. And if you're losing more often than you win, maybe you're not ready for the hard stuff. We had a really narrow IB, which we expanded beyond. We don't have an MDP. We are underneath the weekly pivot. It's a pretty straightforward hurry up and wait kind of situation. We need to get out of this range. And we really are having a hard time doing that because the market doesn't know where to go. It needs some guidance, seriously. Everybody seems to believe that the Fed raised rates enough to break something, and now that it's broke, the Fed's not going to raise rates anymore. If you look back in history at what happens to a stock market after the Fed starts to pivot or starts to cut, it goes down. So everybody who's been waiting on this Fed pause, a pause would be one thing. Start cutting rates. Historically, that's when the market starts to go down again. Usually because they're cutting rates because something really bad is going on and they got to cut rates to kind of ease liquidity conditions. So right now, the theory is buy the rumor of a pivot, sell the news. The news should be coming out on the 22nd. We could continue to see inflows all the way up until that point. And I was looking at the momentum gauge yesterday, like the IWF, IWD ratio chart. It's considered a momentum chart. It's still taking off like a rocket ship to the upside. It's almost like a 15-degree angle. So very steep. And yet the S&P and all the other indexes are sideways, right? So it's the idea that the indexes are chopping, but equities are running. And it comes right back to buy the rumor of this pivot and then sell the news of the pivot. It's worth noting while we're here on this sideways chart that the longer we stay sideways, the more energy we're building up. I know energy is not necessarily a word that we hear often when it comes to analysis, right? Usually it's inertia, trend, momentum. But if we're using, that RSI Laguerre, then that is the word we use, energy. So we're winding up more and more and more energy as we're sitting sideways here. When we finally come out of this thing, and we will come out of this thing, it's very likely going to be an explosive move. It wouldn't hurt to price in some 4,200 strike options on, say, the SPX and 3,600 for the downside. Now, the problem is puts are more expensive than calls. So you can probably get these calls, I don't know, less than $1. But these puts, they're probably going to be about $8. So even though, that's just about in the middle, kind of seems like it. Pretty close. They're not equally priced at all, not even close. So you might have to do like a put spread to keep the cost from being prohibitive. But just straight up buying some cheap 75-cent calls or something like that. Doesn't have to be on the ES though, right? We're talking SPX. It's a little bit of a YOLO for sure, right? Because we don't have any analysis that says we're going there. So just buying calls far out of the money, that's a bit of a lottery ticket. But the entire market is sitting here holding its breath, waiting for this outcome. And it's going to very likely be the game changer for the rest of the year. Now, of course, the more everybody says, "Oh, a big move is coming," no big move comes, right? That's what happened on the last FOMC when everybody was saying, "We're going to get a big move. We're going to get a big move. It's going to be a gigantic move." The more their expectations of a big move came in, the more it suppressed the idea that we were even going to get a big move because nobody was caught off sides. Nobody was surprised. Nobody was unaware. That's why we want to price in some cheap stuff and not try to price in something that is going to hurt if we're wrong. $4,200 and $3,600. That's just about in the middle of these two. You could try to run some iron condors or something like that. Just the the 4,200 is going to be so cheap. I don't think you can actually, you're going to get any real credit on that condor. Maybe a skewed condor. For the expirations to use, well, we know the February 22 is the FOMC that we're waiting on. You could go out to that Friday, which would be March 24. $3,600 strike. Yeah, that's kind of pricey. 750, 780. I mean, for a spread, no big deal. But if he was just going to buy a put, that's a pretty costly put for a YOLO play that doesn't have any analysis behind it that says we should be looking long or in short. And the 4,200, yeah, that's pretty cheap. 40 cents or so, 47 cents. It looks like we're not the only ones having this discussion either. There's about 2,000 open interest sitting there. 41.75, we got it nearly 3,000 there. So on the big strikes, 41.50, 4,200, 41.75. It's where the liquidity is starting to pile up. All right, so way back here, it actually kicks to the upside and there's some profit in there, right? Since we're doing a spread, I really don't see that we need to go all the way down to 3,600, right? That kind of just doesn't really make much sense. If we were just buying the put, then go into 3,600 makes sense. So maybe instead of buying the put spread way out there, we bring it up, right? And start getting into like 37, maybe even 38, depending on the cost. So with the size of that debit spread that I just built, added to the cost of buying a 4,200 strike call, you're looking at about $300. If it was just the debit spread or just the calls, then it'd be a different cost, right? And of course, you just keep everything the size of your risk that you're comfortable with. And you could try to reduce this a little bit by adding a short call, but there's just no money out there, right? So adding a short call way out there, what are you going to get? 20 cents? It's not really going to be all that helpful. But that's something to consider, right? That this market is just winding up, really, really big move, has the capacity to make that big move. And the calls are just absolutely so cheap right now that why not, right? All right, we got a gap to fill on Tesla. Two of them, really. One down below at 174.5 and one up above at 187.70. Right now, we're still sitting inside of yesterday, even with the pre-market movement. We're up to 181.50, and yesterday's high 183.80. So we're not even out of that range of yesterday. But if we get an inside day breakout today in Tesla, if we get above this 183.8, then the first target on this play is going to be that 187.7. There is a little bit of a concern about this spot right here, the 185. But we've tagged that spot, so it is a gap that's been closed. Still, we didn't drive through it very far, and we certainly didn't break through the top of it. So there could be some resistance as you get into that area, some liquidity in that area, 165, something like that. But I still like that 187.5 if you're, for which options you want to focus on. And for a downside move, it would be back down to this 174.50. And that would close the gap down here. If we were just doing the analysis and we weren't really considered about ECB or anything else, this is a setup for a continuation long back up to around that 200 area. Yesterday was a little bit of the springboard, the pause after this big gap up. So if we were just doing technical analysis, we would still be focused on longs. We just have to take into consideration that this chart and everything else is going to be affected by the ECB decision and the job numbers coming out and all the other stuff. Microsoft had a big expansion day yesterday, and it wasn't the only one. Google has a chart very similar to this. This is still part of the buy the rumor. And it's up again this morning, but barely. It's up a dime, so basically nothing. For this continuation, we want to see another inside day breakout, and we want to focus on closing this gap, 269.32. After this much of a move, you would start to believe that it needs to take a break and pause, but I think we're going to continue to see that buying all the way up into FOMC unless something changes, right? That momentum chart that I was talking about was just nearly straight up. Tech and banks are responding to a lower target rate, right? And that's what everybody's focused on. If the Fed is done hiking, at the very least, if they're done doing that, then their projected target rate of nearly 6% is now off the table, right? That Jackson Hole statement where he came out and said it's going to stay higher for longer, so suck it up and take it, right? That mic drop moment from last August. Well, if it's no longer higher for longer, this is going to be the outcome for a little bit, at least. That just off the chain buying. So big expansion bar in Google. The thing about Google is it really struggled at this pivot point, and on Microsoft, it's already well above that pivot point. Same thing here with Amazon. Nice expansion bar yesterday. Still couldn't get through this pivot. It's the same thing on all of these. That pivot, and it's either expanded past it, like with Microsoft, or it hit it yesterday and wasn't able to get past it, like with Google. NVIDIA is back up into that rejection zone. This one is worth watching. Maybe they all are, but I mean, this one is back up to the top, right? We talk about don't diddle in the middle. In all of those others that I just showed, it was still in the middle of a something. This isn't in the middle of something. It's right at the top. So we're going to break through here today and expand with a really nice breakout. Or we're going to take a beat down and come back the other way. This morning in the pre-market, it's up. So it's trying to expand beyond that previous week's high. 244.50 is what it hit this morning before it rejected, or pretty close to it. That previous week's high right there. Got pretty close. So we bring that back out onto the daily. This morning it made it up to this level. But what I want to caution you on is something that looks like this. So we could open gapped up, maybe even run just a little bit more, and then down we go, right back into this zone. So a little caution on the breakout today. But out of all of these, this one is actually at the top or the bottom of a range, right? Being on the edge of something rather than being in the middle of it. And since we're talking semis, AMD made it through. We got like a little micro cup. So we're going to be looking to see if this is a cup with no handle or a cup with a handle. If it's going to get a handle, it's going to get a pullback. The measured pullback is around 86. So far this morning, it made it nearly to 90.50. So inside day breakout, or pretty close to an inside day breakout. I guess it didn't. It didn't make it out. 90.30. So it didn't quite make it on this breakout. And this is a closed gap. I was thinking maybe it wasn't closed, but it is. Meta, same thing, top of the range. It expanded through that zone and closed above yesterday. That's a bullish close, right up against the top, no wick, and then an even greater expansion in the overnight. It got above 200. It's still above 200, but it's kind of giving it back. Made it up to 204. So it made it all the way up here. Might at this point be looking for a little bit of a Busby. So a fade back down, test against the old resistance, validate it as a new support. That's a Busby. Trading this one though, you're going to want to keep your eye on any of that TikTok news that's going on. They sure are. I never trade that thing. I use KRE like a tool, a tape measure. I never trade the darn thing because it's completely illiquid. So are the names that are in it, by the way, right? Like if you think of KRE as an ETF, it's got a basket, it's a basket of stocks, right? It represents things. So when you go in and you look at the names that are in KRE, they are just as illiquid as KRE is. CMA, KeyBank, FRC, CFG. Yeah, and I mean, XLF is a little better, but not much. I generally trade the names that are in the XLF. And then I kind of break those down into two groups because they generally run that way. So here's XLF, the top three, JP Morgan, Bank of America, Wells Fargo, they very, very often all do the same thing. And then the bottom group, Citi, Goldman, Morgan Stanley, these three generally do the same thing. So the way I approach it is if I think JP Morgan's going down, so's Bank of America and Wells Fargo. If I think JP Morgan's going up, so's Bank of America and Wells Fargo. Whichever one of these three moves first, very often the other two will follow. But that doesn't always work, right? Just like right now, Bank of America and Wells Fargo both have that green day, but JP Morgan did not have that green day, not yesterday. So it's not playing with its cousins like it normally would. It's a little bit of a disconnect, and it looks more like Citi at this point. A lot of what was going on in Credit Suisse yesterday has been resolved, and that thing has already popped back up like 23% this morning. And these bigger name banks are getting a lot of deposits, and they're going to like the lower terminal rate. See, when it came out that the Fed hadn't broke that Silicon Valley Bank. They were completely mismanaged and were making poor financial decisions. And then they're raising rates, crush them. But it didn't crush all the other banks who were being managed appropriately and managing their, dealing with things in a way that's supposed to be done. So the Fed didn't break them. Now all the other banks that can prove that they're not in distress are getting bid back up again. When it was a lot of uncertainty, everybody just approached it from the idea of screw it, sell first and we'll talk about it later. And they dumped it. So I would expect a little bit of a mean reversion at this point. If there are continuing underlying issues on JP Morgan, I don't know of them yet. And that doesn't mean anything, right? I don't spend a massive amount of time on this bank situation. So if you are reading about it and you know more about it than me, that wouldn't be a surprise. Looking at the chart, if we only did technical analysis and left out any of the background noise, it certainly looks damaged and it looks like the move isn't done. But you have to believe there's going to be a little bit of mean reversion on the way down, that it won't just be a straight shot. We're at a significant level of support. It might digest there for a little while. It could take anywhere from a day to a month of just sitting here chopping at this level before it continued on down. So the NASDAQ has been favorable if you consider taking a look at NY Fang for an example. And we just went through those names: Facebook, Microsoft, Apple, Tesla, Google. And it's this whole idea of buy the rumor, sell the news on the pivot. So while the ES is really lower, I mean, much lower than the Globex high, and it's underneath its 3 MA, it's underneath its 10 MA, it took a beat down. The NASDAQ is above the 10, above the 20, above the 3. It's resting on yesterday's high, and it's still really close to the top of this zone. As long as the fangs are holding up, you got to have an expectation that this is going to continue to not give it up like the ES. But both of these are dependent on what's going to happen in the ECB. Plus, in about 5 minutes, we're going to get some econ, and this market's about to take a walk. That is going to trump everything else. Right? So no amount of technical analysis can give you guidance on FOMC or CPI or job numbers. And right now, European Central Bank is just about to do a rate hike. If that confuses you, just imagine that it's the FOMC and they're going to do a rate hike, because the only difference is it's not America, it's Europe. But it's still a rate hike, and it's an important one. And that's going to trump everything else. So it doesn't matter if you're trading in the NASDAQ, the Russell, you trade in the ES, in the SPOOs, it doesn't matter. If we get a little frisky to the upside, taking a rejection on the previous week's high for a move to the downside would make sense. Since we are inside day breakout, I would be looking for that low in the Globex to get below this. And so far we haven't been able to do that, right? We came down and tested it, rejected off of it. This is a consolidation of structure. If we were to use the regression line right here, just started at the peak, drag your mouse across. There's your waves. You can see where the trend is. We're going lower. So if we break back inside of yesterday's range, the daily pivot point would be my target. Right now we're in an MDP. It's a missed daily pivot. We haven't hit it. Since we have a range here, you can measure that range or the zone. First target would be 12,356. And that's if we can get through the warning center of 12,367. Use that new quant tool that Thinkorswim offers now. Plot yourself 50% of the move. 333. And then the daily pivot. And then you're going to be contending with this roundy down here, 12,300. Market maker move, 1.5%. Added to the daily ADR of 2%, that gives you a 3.5% projected move on the NASDAQ for the day. So if this is your trading vehicle today and you want to avoid the chop, it needs to get out of that box right there. That's your Globex zone. If you come back in the zone, all the pivots of yesterday come into play. And then for the upside, we just use the quant levels using that quadrant lines. All right, yields continue to fade down, testing this low. We've still got a critical level, that 3.3 to get through. And until we do, we're just kind of stuck in limbo land. So this needs to kind of try making its way back up to the previous week's high, or it needs to get down and get below that 3.3. The longer we just chop around here, the more we're going to have choppy, nasty mess and everything else too. Once the market opens, you can swap off from the 10-year to the TLT and TNX instead of having to use ZB and ZN and the 10-year. ETFs are a little cleaner. They don't offer anything in the pre-market, right? So using the futures until the market opens and then swap over to the ETFs is better charting. So we got the dollar kind of stuck in this zone or range. We need to get out of this. We're sitting right in the middle. And there's a lot of resistance, a lot of trouble to work through here. Really nice evening star reversal off of the high. Really don't have a lot to work with until we get out of this. The VIX is back. In just about every kind of volatility product out there, volatility is back. Whether it sticks or not, you know, as long as we're rotating, it's probably not. But if this capital rotation gets stalled and we quit rotating through, then volatility is likely to pick up again. Seen some calls for $60 in volatility this year. Wouldn't be a surprise. It would only take an event. So as much as it sucks, play everything close to the vest. Keep your eye on the news. Remember that it's very likely going to continue to stay bid when it comes to these FANG names, right? And even yesterday, it was really the later part of the day when it finally kind of broke out, and it didn't go far. It broke out and then just stalled again. But it stayed bid, right? It's kind of the main thing. It stayed bid, and it's these big tech names. So this is what I'm referencing when I talk about the momentum chart. This is just a ratio pair, IWF and IWD. There's other ways to do this. It's a growth versus value, and there's a lot of growth ETFs and value ETFs. You're just taking one against the other. Typical ratio chart. And this move here is just crazy. This MACD down here is built for that and not for what we have across the top, which is SPY. Because if you look at SPY and this fade down here, this certainly does not look like it has anything to do with this. I mean, that's extreme. We got KWeb basically flat, emerging markets flat, emerging markets. That was the other thing I was going to mention. So this really broke down yesterday. It went a little wild. And it hasn't really come back yet. It's basically flat against this morning. this is also a basket of stocks, basically. I mean, it's not, but so we use this kind of as a China perspective, because China is an emerging market and it's the biggest portion of this. If we were to cut it up like a pie and dish out pieces. And K-Web also kind of flat this morning, a whole lot of nothing. Ties right into BABA, Baidu, PDD, JD, those China ADRs. They're all resting down near that support level. So a breakdown in those names. $116 in Baidu. $124 would be the first target. I wouldn't short that. That thing's already so far in the hole. All right, PDD got a bit of maybe a trend line breakover. Back down to 86. You could focus on 50% of this candle. About 88. If we do get the breakover, then target this zone. Be careful when you get around 96, and your bigger resistance is at 98. But we're not seeing a short covering rally. We're not seeing the proxies from Bitcoin. This is up this morning. BITO. %12 of the S&P is up 0.5%. That's nothing. And only 13% of the NASDAQ is up 0.5%. So we don't have much of anything. Continuation on Google, Netflix, PDD, Facebook. All right, so looking at the FANG names, NVIDIA, Apple, Microsoft, basically flat. Google and Meta is up. We got to take Meta out of the package because it's up on that TikTok and everything related with that. which leaves Tesla and Google. And Amazon, but Amazon's flat, right? So over half the names, and we're looking at yesterday being carried by the FANGs. If we don't have them today, we better get the financials today, right? It's going to be the same situation as the last few days. High correlation coefficient for a move to the downside and a low correlation coefficient for a move to the upside. It'll either be tech or it'll be finance. If we get both, that'd be awesome, but it would be a massive rip to the upside if we got both. So watch the clock, see what they do with Europe. Keep your eye on energy, yields, and bonds. Those three are going to be your tell. Finance, with all the news and everything else, it's very likely not going to be very helpful for any kind of tell on where the market's going on the day. The dollar, yields, bonds, energy. Deflation, I think that's going to be the key. Everybody be careful, be safe. I'll see you.